The global economy is in a precarious state. Just a few weeks ago, economists were predicting solid growth for 2023. Some even suggested a soft landing scenario. In this scenario, inflation would cool without triggering a recession. Now, the mood has shifted dramatically. The risk of a recession is looming large. This rapid change in outlook is deeply unsettling. What caused this sudden shift from boom to gloom? The answer lies in a series of bank failures that have sent shockwaves through the global financial system. These failures have exposed underlying vulnerabilities. They have also raised fears of a wider financial crisis. The economic outlook has changed dramatically in a short period. At the start of 2023, many economists predicted continued growth. Inflation seemed to be easing. Consumer spending remained strong. There was a sense that the global economy was on the road to recovery. However, this optimistic outlook proved to be short-lived. The banking sector's turmoil quickly changed the narrative. The situation underscores the fragility of the global economy. It highlights the interconnected nature of the financial system. It also serves as a stark reminder that economic forecasts are not guarantees. The coming months will be critical in determining whether the global economy can avoid a recession. It all started with the collapse of Silicon Valley Bank. Silicon Valley Bank was a major lender to tech startups in the United States. Its failure sent shockwaves through the tech industry and beyond. Soon after, Signature Bank, another U.S. bank, also failed. This sparked fears of contagion, with investors worried that other banks might also be at risk. These failures were followed by the near collapse of Credit Suisse, a global banking giant. Credit Suisse had been struggling for some time, but the failures of Silicon Valley Bank and Signature Bank proved to be the tipping point. To avert a wider crisis, Swiss authorities orchestrated a rescue deal, forcing Credit Suisse to merge with its rival, UBS. These bank failures have had a profound impact on the global financial system. They have eroded confidence in the banking sector, making investors and businesses more risk-averse. This has led to a tightening of financial conditions, making it more difficult and expensive for businesses and individuals to borrow money. The tightening of financial conditions is already having a tangible impact on the real economy. Banks are becoming more cautious about lending, particularly to businesses in sectors perceived as risky. This credit crunch is likely to weigh on investment and economic activity more broadly. The International Monetary Fund has warned that the bank failures could lead to a sharp and painful recession if not handled properly. The International Monetary Fund has downgraded its global growth forecast for 2023 to 2.8%, down from 3.4% in January. The organization has cited the banking turmoil as a key factor behind the downgrade. The big question now is whether these headwinds will be strong enough to push the global economy into a recession. The answer, unfortunately, is that it remains highly uncertain. There are some reasons to be cautiously optimistic. Labor markets remain strong in many countries, with unemployment rates near historic lows. This suggests that consumer spending, a key driver of economic growth, may hold up better than feared. Moreover, central banks around the world have shown a willingness to act decisively to support the financial system and prevent a wider crisis. However, there are also significant downside risks. Inflation, though easing, remains stubbornly high in many countries. This is forcing central banks to continue raising interest rates, which could further dampen economic activity. Additionally, the war in Ukraine continues to cast a long shadow over the global economy, disrupting supply chains and fueling geopolitical uncertainty. In conclusion, the global economy is at a crossroads. The recent bank failures have exposed vulnerabilities in the financial system and raised the specter of a recession. While there are reasons for both optimism and pessimism, the outlook remains highly uncertain. The coming months will be crucial in determining whether the global economy can navigate these challenges and avoid a downturn.
If you found this valuable, subscribe to our channel, like and share this video with your friends, and hit the bell to get notified of our future content. Now, go watch our other videos.